The S&P 500 is hitting fresh record highs, but some signals suggest this rally may be getting stretched. So is this breakout real, or are we setting up for a pullback? Will Tamplin is Senior Technical Analyst at Fairlead Strategies. He joins me now. Will, great to have you.
And thank you for having me.
So we have the S&P 500 hitting 7,000 for the first time ever yesterday. It's holding just above that today, although we are seeing some modest losses. What are the charts signaling here?
Yeah, so we think it's not quite real yet, so we're not convinced. So we're actually of the mindset of using this rally to get hedged or paring back exposure, and it's for a few different reasons on the charts. One is the S&P 500 has seen a loss of long-term momentum that we think is significant. Really in Q1, we saw that loss of long-term momentum. For those who are more technically inclined, a monthly MACD indicator can reflect that loss of momentum behind the trend. And then another is just with the rally that we've seen. It's been an incredible rally so far in April, and we're starting to see some signs of near-term upside exhaustion. So we're just essentially overbought. We're near resistance near 7,000, and we like to see confirmation of breakouts. So we like to see a couple of solid weeks above a level as key as 7,000. So we don't think it's quite real yet. Obviously, if we see the 2 weeks, a couple of decisive closes on a weekly basis above 7,000, then we'll get more constructive on an intermediate term basis.
Okay, so 7,000 obviously a key level. I mentioned that we are above that right now, but what are the other levels that you're watching to the downside if we can't stay above 7,000, and then to the upside if we do?
Yeah, so the really key support that we're watching, it's quite far below now, but it's around 6130 on the S&P 500. We almost got there, or we got near that area when we were at the lows in late March. But we do think that there is some risk that we see another significant retracement sometime in Q2 and get down closer to that level. Kind of an intermediate level between here and there, since that's pretty far below, is just we're just watching the gap that we had from a week ago, or might have been 2 weeks ago. And so we're watching that gap. If we penetrate through that gap and fall back into it, then that would be a sign of a more meaningful retracement.
You talked about the loss of momentum, which makes you think that this rally could be getting stretched. But when you look under the surface, is it a broad rally, or is it really just about some specific names? Because it seems like we're talking tech names again.
Mm-hmm. Yeah, it's been really broad. I mean, the rebound off of the low has been really broad. Like the signs of exhaustion that we're seeing are within tech and in areas outside of tech too.
But isn't that a bullish sign then, that it's a broad rebound?
No, that is a bullish sign. But in a way, when we see a widespread overbought condition, you don't get that rotation into other areas that maybe aren't overbought. So when everything is overbought, that's when you can get sort of that exhaustion on the breadth front. So our breadth metrics are short-term overbought and suggest we might see some sort of breadth contraction associated with a market pullback.
What areas look overbought and what don't?
Yeah, so the most overbought, we've seen the tech has been the leadership off the low. When you chart like the Spider Tech ETF XLK relative to SPY, there's some overbought signals that we're seeing there, some signs of upside exhaustion that suggest that the outperformance is overdone in that ratio. And so on the next lower, if we see it, we're expecting technology to sort of resume downside leadership after having been upside leadership.
I was taking a look at your notes, and you say the sharpest rallies happen in bear market cycles. So does this feel like a bear market cycle or a bear market pop?
Yeah, I mean, we don't think it's a bear market yet. Certainly we have the loss of momentum, long-term momentum that I referred to earlier.
I mean, it's S&P 500 is at record highs.
Right, you can't call it a bear
market.
Yeah, you can't call it a bear market yet. It could be a trading range though. So if 7,000 ends up holding and we fall back below and we leave that breakout unconfirmed, you could suggest maybe it's a trading range or just a choppy type of year. Sometimes we see that during midterm years. We see choppy types of environments, also like a 4-year cycle. So we've been 3 years up before this one, and now we're on the 4th year. And so there's some seasonality that kind of supports the idea that we might not just be off to the races.
How likely is that retest of the recent lows, the 6,100 level? And I know you talk technicals versus fundamentals, but what is it that you think would bring us back there?
Yeah, I mean, it's probably going to be crude oil and the shock there that ends up having an effect on the market. Um, you know, we actually did a study on crude oil shocks, and they tend to give way to like multi-month corrective phases, or they can. Just the past few that we've seen referencing like 2011, 2018, 2022, that cycle. So some rougher environments where the corrections weren't just 1 month, kind of like we saw in March. So that's part of the reason why we think 7,000 is going to hold, and then we'll get that retracement back towards that 6,100 area. Obviously, if we break out and confirm above 7,000, then certainly we think that a pullback will be delayed and the market can extend further, more in the short to intermediate term before the next correction.
Let's talk about oil. What does the chart show there? Because we obviously have oil significantly off the highs right now, but still sharply elevated for the year.
Yeah, so it came up and tested some resistance around $100 to $102 per barrel. It never really like stuck though. It got above briefly, but every time it kind of got repelled, and now we're pulling back. And we have support right around $88 per barrel on crude oil, and we're oversold now on a short-term basis. So we think next week we could see a rebound in WTI crude oil off of that support that we're watching. It's based in part on like the 50-day moving average, also a cloud model, also called Ichimoku, that we follow. So sort of a confluence of support there and a short-term oversold condition. And if we see that bounce next week, that's just another reason to think that equities which have been inversely correlated, we might pull back and leave that 7,000 level intact.
If we don't see a bounce next week in oil, is this a market that can move higher with oil at $88 a barrel?
Yeah, I mean, if the equity market confirms that breakout, and especially if crude oil broke 88, then that would give us some confidence that, hey, this is an intermediate term retracement in crude, and an intermediate term sort of rally in equities that has staying power beyond the near term. If the market confirms that breakout, we want to be respectful of breakouts. As technicians, we think they do give way and yield upside momentum when you clear significant levels. And so, yeah, I mean, if whether or not crude is above or below 88, if the equity market, if the S&P breaks out, then we'll be respectful of it.
What about Bitcoin? Because it's higher on the month, but we haven't really seen any big breakouts in Bitcoin in quite some time. I mean, not as much volatility as we used to see, but when does it get back to the highs?
Yeah, Bitcoin is in a proper bear market cycle, but within that, we've seen this sort of shallow counter trend type of move that it's been in for the past several weeks. Hasn't really been able to accelerate to the upside though. We are watching, I referenced earlier the MACD indicator. We're watching the weekly MACD indicator for Bitcoin. It's almost on a buy signal, or it is on a buy signal. We're just waiting for the end of the week for sort of confirmation. So that would be Sunday evening at the end of the week. And if we see that, then we think that Bitcoin could accelerate to the upside for a more significant pop than we've seen. Initially the next level for Bitcoin is just above 78,000. And then above that, we're watching the 200-day moving average for Bitcoin.
Which is what?
I think it's just below, or it's right in the mid 80s, or mid to upper 80s.
Okay, and then what about to the downside?
Yeah, to the downside, we're watching a 61.8% Fibonacci retracement level at 57,800 roughly. That's a really major level. Above that, there's some more minor support at 70,000. So if you're a short-term trader in Bitcoin and you're playing, we get that MACD buy signal and you want to play a bigger bounce, maybe you have a stop loss just below 70,000 if you're a short-term trader, because that's the more immediate support.
Okay, so bringing it back to the broader market, how do we classify your view? Because you're talking about retesting 6,100 at a time when the market is, I don't want to say euphoric, but it's at 7,100, not really paying attention to the fundamentals necessarily. Are you bearish? Cautious?
Yeah, we actually have a neutral bias in our research right now. I mean, when you have a resistance level that's being tested, it's sort of, we call it a proving ground in a way. So, if we break out, then obviously we can get more bullish in our research, and we'll be more willing to take long exposure or seek out long opportunities. Whereas if we pull back from 7,000 and we start seeing momentum fall off, then we're going to get more bearish. So it's really just kind of while we think the market's just at a key point. But I would say longer term, we're probably not as constructive as some technicians are. We're at new highs. some people, most technicians probably say, oh, this is a nice uptrend. We're a little more cautious, just like I said, with the long-term momentum and the seasonality and cycle work. There's some things that would suggest that we're more in a more volatile environment.
So bottom line, do you trust this breakout?
I don't know. Not with the overhangs from the long-term indicators, like I mentioned earlier.
So you would use this strength to rebalance?
Yes,
Okay.
That's our call right now. And if we break out, then near term you can get constructive, but still, once momentum turns lower on the short-term basis, we're going to be respectful.
Okay. Well, let's transition to our rapid fire game of this
All right,
or that.
let's do it.
Quick questions, quick answers.
All
Are
right,
you ready?
Let's do it. Yeah.
All right, here we go. Relief rally or new uptrend?
Relief rally.
Breakout or fake out?
Fake out.
Buy the strength or fade the rally?
Fade the rally.
Defensive rotation or growth leadership?
Defensive rotation, I think, will happen soon. Yeah.
Broad participation or narrow leadership?
It's been broad. I'll say broad participation.
Strong foundation or shaky footing?
It's shaky footing.
Tech bounce or further downside?
Further downside.
Oil higher or rolling over?
Higher.
Yields, tailwind or headwind?
Headwind.
Conviction or caution?
Caution.
Up next, higher highs or newer lows?
We're at a new high, but soon a new low.
One word to describe this market.
Choppy, volatile.
All right, we'll leave it there. Will, thanks
All right.
so much for your technical
Thank you.
analysis.
Yeah.
Really appreciate it. That's
Appreciate
Will
it.
Tamplin, Senior Technical Analyst at Fairlead Strategies. If charts are your thing, be sure to check out our interview with Gareth Soloway as well. He has his sights set on a level even lower than 6,100.